Cool. Let's get into it. So, Martin, thanks for joining. What I just wanted
Great
to
to be
give a
here.
bit of context I wanted to give a bit of context to equally myself and the listeners. But what is it that DebtStream do, and what kind of problems are you solving within your market?
So, DebtStream ourselves, we're a digital collections and recoveries platform. So, our platform itself enables consumers or businesses that have fallen behind into arrears or further stage collections and recoveries kind of activity to go through full self-service, right from making payments to structuring payment plans around their affordability. I guess when it comes to the problem that we're solving, a lot of it is around, I guess, consumer or expectation on engagement, right? People's behaviours and habits have changed massively, and it's continued to be accelerated by the pandemic as well. And also for businesses, the recruitment market is really tough at the moment, and given more scalability within their collections operation is a real key thing of why digital is a key kind of focus area for a lot of businesses today.
Yeah, great. I agree. I agree. I think that the current landscape of all this, I think, is we could dive into this for hours and talk about this because I know it's something that you're quite passionate about. Equally, from your side, Grant, obviously from Acquired's perspective, I mean, what kind of problems are we? I'm going to say we, as I work with Acquired, but what kind of problems are we solving at the moment in and how we're helping people at DebtStream like Martin?
Yeah, absolutely. So Acquired is a agnostic PISP for open banking in the UK and proprietary payment gateway with multi-acquirer connectivity. I think the key benefit of that when you look at the lending ecosystem in particular, and we're also embedding direct debit into our platform later on this year as well, is giving end consumers multiple options for payment, right? Because there's a lot of complexity. There's consumer duty coming into the market imminently, already here, really effectively, and everyone needs to be aware of the implications of that and the benefits of it as well. But I think being a bit of a buzzword in payments and orchestration platform, if you like, but we're giving customers ultimately multiple ways to pay within our platform, and platforms like DebtStream that want to work with Acquired are availing that multi-provider, multi-solution connectivity that we can give to the market.
Yeah, great stuff. Cool. Okay, so getting into the topics, I know that we went out, we had a couple of people we wanted to, we went out and found some topics that we wanted to talk about. We've got a couple of questions that we want answered. So going straight to you, Martin, again, I want this to be as open as possible. So Grant, feel free to chip in if you've got anything that you want to cover. But what's just straight off the bat, what's your current thoughts on the on the current cost of living crisis and just that kind of whole affordability piece and equally why are more and more customers these days falling into arrears? I mean, what talk to me and equally the listener about that.
Well, I guess on the last point that you're covering, why more and more people fall into arrears, and then if we're looking at the cost of living crisis as a whole, that is a big factor, right? Cost of living crisis is having a massive impact on people falling into arrears, alongside other factors that have happened. Businesses, for instance, have an increased cost, so people are losing their jobs, or other factors based on the market. People know across the UK, Europe. We know there are there are other. Oh, look, a call coming through at the time. Sorry about that. It's come through on my Mac. Everyone listening as well, so I couldn't actually hear what anything I was saying. So on that side, like the war in Ukraine and other things, for instance, that have happened, we know is exacerbating like costs across all types of services and sectors and living costs in general for people. Now, what that has meant is we're having new people fall into arrears that have never been in arrears before. What does that mean? What does that mean? Like you've questioned around affordability, for example. Well, how are you going to support these people? They've never been in arrears before. They're quite high average like earners as well for our country, and they don't understand the process. They don't understand the options. What are you going to do? Now, a lot of these people don't want to speak to someone. We talked about digital as well. In general, earlier I talked about digital and the inception of digital and collections, and why it's becoming more and more important, and businesses are looking at these options. it's a process full of anxiety, right? You don't want phone calls, letters, and all these other things going through a process like because you've missed a payment that is not your fault, based on a life event and situation, you're suddenly getting phone calls and everything. So providing a digital safe space, an option that a customer can go through, have supportive content that's relevant to them, personalization is key, and then allow them to assess their affordability, look at options potentially like how they could increase their income, something we've been working on as well, like how could they increase their benefits they're entitled to? Because a lot of people that work full time don't understand they are entitled to benefits as well. And then actually structure a payment plan that can help them get back on track. But they can do this all in their own time on their terms when it suits them. And I think it's going to be more important than ever the people that are new, like I said earlier, that are coming into this process that have never fallen behind before.
Yeah, I think, speaking personally, well, probably for anyone born in the 80s or beyond, actually, we've never experienced anything like this in our lives as well. I mean, you've had the banking
Yeah.
crisis, but the actual amalgamation of different global events that are taking place currently to create this sort of inferno of a market that we're in around, as Martin said, that the levels of debt that people find themselves in. It was hard enough for people of a certain generation to get a mortgage previously. Now it's nigh on impossible. What does that mean for the housing market long term? I mean, it hits so many different sectors. We work within the automotive sector as well. Are people going to be getting loans for cars anymore? The secondhand car market's booming because of the chip market. That's probably changed the way that lenders operate in that particular vertical as well. So there's loads of stuff going on. And from our point of view, as far as payments are concerned, we want to support the businesses that are struggling to collect those funds as well as the end consumer that's struggling to pay for those goods or debts. And by having more payment methods available and in different markets, we feel that we're helping to solve that problem. And for platforms like DebtStream here as well, where you've got different types of customers that are utilizing your services, and with the acquired proposition, I would like to think that we're ticking most of the boxes that you need to give those customers the choice of payment method that they need.
Well, the thing is, like you said, someone actually going at that point, they've chosen to engage, they've chosen to go through and look at payment options and try and make a payment. And if it's full of friction, it doesn't work, they have failures and issues through that process, they disengage, they've tried to do the right thing. It's a really difficult process for a consumer, and it's difficult for businesses if it isn't frictionless payments that have the right options at the right time as well, because getting someone's engagement is really difficult when it comes to these processes. And once you've got hold of that, if you throw it away because you haven't got the right payment options in place, and then it's a difficult process and a journey for them to go through, you're going to lose so much value for the business, but then you're just going to disengage that customer even further.
Yeah, I think this isn't, I think if you look at just the payments landscape in general, I think it's hard enough to get someone to convert a shopping cart when they actually want to buy something, let alone when they're paying
Yeah.
money for something like debt. We see cart abandonment all the time in other sectors where the consumer is actually engaged and wanting to buy a product, let alone when they're not wanting to pay for something, which i.e. in this case might be a form of debt. So I mean, we see it in multiple sectors and we see it all over the payments landscape, but digital adoption is becoming more and more and more powerful in every single sector there is. I mean, touch on it a little bit, Martin, about how that's actually no different in the collections world. It's not just the same as it used to be, straight normal card sale, about giving customers as many options as possible.
Well, so I guess you're saying about digital adoption increasing across sectors. So if I just think about that first, it's worth highlighting, and everyone knows that's watching, everyone knows that's on this call, that we went through a huge event recently in the last few years, the pandemic, that put everyone in a very different situation than they've been before. People running call centers that had people that are having to set up infrastructure very quickly to get them working remotely so they could support customers that were falling into arrears, be able to take payments, for instance. But what actually has happened off the back of that is there's been a huge shift around, like we think from insights and research, like 5 to 7 years shift and advance in regards to digital adoption. So that's one of the factors. It's changed behaviour. So digital adoption was on the increase anyway, but now it's accelerated by 5 to 7 years for businesses. So people need to play catch up. One big fact of that is 75% of people that have adopted digital in the pandemic are now going to choose to still use those digital channels, but they have a high expectation of how they're being treated, the service they're being provided, and the options that they have available. So for different businesses, and it's no different when it comes to collections, adoption of digital processes as a choice and payment options is a big factor of that, as you guys can imagine when it comes to collections, based on our conversations, is a really important thing to have in place. And it's actually important for different factors of, Grant, we've talked about consumer duty before, for instance, on that side, you mentioned like consumer duty earlier. And it's really important for consumer duty, making sure they have a consistent journey, because they have these different payment options up front with a utilities company when everything is good, but making sure they still have those consistent payment options, with their consumer lender or whoever it be when things go bad as well is still really important.
Yeah, and I think, not trying to take a payment when the funds aren't there, to be taken as well, and causing the issues that can cause the end consumer around credit and damaging credit.
Yeah.
And that's why open banking for us was a huge thing to, with 2019, we got our PASP license, and for us, it's been a journey to embed that within our platform alongside card, but meaning that, if someone has got, I think that most people on this call probably and out in the wider world have more than one bank account these days. It's not normal for people necessarily to just have, whether that's having a Monzo, a Starling, and a Revolut card alongside your high street bank card still, or but you probably have different amounts of funds on different cards. So if you've got a recurring card payment on CPA or a direct debit linked to one specific bank account, you might not have all of your funds in that account. So if you're falling back to something like open banking and saying, well, actually, I can't afford to pay £150 out of the account you've got my DD or recurring card payment set on up on at the moment, but I can afford to pay you £50 via this separate bank account. So if you send me an embedded open banking payment link for a pay by bank transaction, the lender's still getting some money back in terms of the collection. The consumer's not overstretching themselves in terms of their affordability and what they can afford to actually pay back in that given month. So you talk about giving the customer choice and flexibility. That is a big thing there. And taking a step back to the wider digital point that you made around the pandemic, I mean, that was certainly the busiest time that I think I've ever seen in 12 years in payments, certainly from, and I think probably beyond that as well, to be honest, in terms of the adoption that was taking place, businesses moving online. Obviously, there's been a slight fallback since, with some valuations being slashed, because the reality is that consistent growth at that scale wasn't going to stick around. However, I would say with regards to the long-standing impact of that, there's better functionality for businesses that maybe were living a little bit in the past. Things like embedded payment links for us is and continues to be huge for businesses that had relied on people coming in to make payment to a physical environment, or using antiquated invoicing solutions for manual bank transfer. They can now obviously use secure payment links for card, for open banking on pay by bank. It's made business journeys better for payment flows, but it's also made the customer journey a lot stronger as well. So although the pandemic's obviously been horrific, the digital impact of what's coming out the other side of it, I think, is improved consumer journey within a multitude of sectors, whether that's lending, whether that's payments, retail. The market has changed forever ultimately.
I totally agree. It's a much better customer experience, which, of course, at the end of it, everything we're doing is driving customer experience, like your organisation and what we're doing, and it does improve the customer experience on a huge level. Like I said, whether it's actually based on their affordability, Grant, or actually just giving, once again, going back to what we said earlier, frictionless options. But I guess it's providing a better experience of businesses as well, because open banking payments, opposed to like some of the traditional side as well, offers lower processing costs. For instance, for businesses, it offers different options that they can present to customers. And we're seeing, and it's spoken for with yourselves and implementing and getting your PISP license, we're seeing like a good adoption from customers, especially after the 3D Secure version 2, the strong customer authentication changes end of last year. That is changing the behavior for people. They're actually seeing right now with transactions where they're prompted to authenticate through their bank account, and it's actually getting them used to the type of journey that an open banking payment is as well. It's very similar in the concept. A few clicks through their bank account and they're done. So If they're out and about and they had to pay for something, Grant, very much like Apple Pay, they can just do it in a few clicks. They forgot their wallet, they forgot their card, don't need to worry about it.
And while we're on that topic, I think if I could jump to you, Grant. I mean, what benefits are there for businesses, and equally in this scenario, in regards to collecting debt? How can, I suppose the question I want to get to is what other benefits does open banking provide the business that's collecting the funds over just a streamlined customer experience?
Yeah, I mean, certainly talking at it, as a PISP for payment initiation in particular, the key benefits versus card. So card payments don't settle over weekends. So that there's normally, I mean, the industry standard was generally 3 working days. That has come down to 1 working day within certain sectors and with certain providers. But pay by bank is 24/7, 365. So you're getting instant payment on those transactions. A card payment is broken up of 3 components: the interchange for the issuers, the scheme fees to the card schemes, and then the acquirer margin. So there's 3 mouths being fed on every transaction, and it's based on a percentage-based pricing model primarily, pence per transaction to the gateway thereafter. But you take an open banking transaction, okay, the market is a little bit muddled in terms of how that different people are pricing, but generally speaking, there's a pence per transaction rate that's fixed, like a gateway transactional cost might be, and a platform fee, or there's a percentage fee generally that falls below what the interchange and scheme fee on a normal card payment before the acquirers even put their margin on top would actually be. So significant reduction in transaction charges. I mean, when you look at early adopters, certainly higher average transaction value businesses are in the sweet spot. Martin talked about Apple Pay versus a pay by bank transaction. It's ultimately not as slick as a digital wallet payment would be, where it's 1 click checkout. Open banking, there are a couple more journeys. I'm not going to sit here and say there aren't, but if it's comparing it to a 3D Secure version 2 payment flow, certainly it's very, very similar. And then you have the argument around consumer protection. So you probably won't see it in retail as heavily, in travel and things like that, where chargeback protection on a card payment exists. But if you look at certainly where we've had early adoption, it's high average transaction value businesses where they were already moving across to actually effectively manual bank transfers. So they were creating ugly customer journeys that using account number and sort code where that consumer protection didn't exist anyway. So they're saying, well, actually, let's put a seamless payment flow in place to replace the actual manual bank transfer clunky journey that we've got now. And the reconciliation benefits that sits with a finance team for that as well. They might have a portal for their card payments. With the acquired hub, for example, we have one data flow for our pay by bank transactions and our card transactions collectively, because we service both of those parts of the transaction flow. So a finance team is seeing all of their forms of pay, and the same will be applied to our direct debit solution when it launches later on in the year. So you'll be able to see all of those payment methods from a reporting point of view, and in the checkout in one central place for checkout and one centralized location for reporting and reconciliation as well.
And I think thinking about it for collections and recoveries, then Grant, as well, based on your points there around businesses, I've talked a lot about consumers and touched a little bit on businesses on that side, but thinking of credit control processes, invoice-based recoveries, like you said, high value items, for instance, on that side, and a lot of it is done by bank transfer currently, but actually this enables businesses to go through and have digital collections and recoveries and credit control processes that are frictionless, easy for businesses, lower the cost for the businesses that are offering the payment options, but then make it really simple and easy for their clients that is paying the invoice or the outstanding amount as well. So it's going to have a huge impact across business and consumer side, isn't it, having the right payment options?
There'll be a mixture of the reasons why people are deploying it. For some, it'll be pure cost. I think when you look at HMRC, they were the original sort of poster child of pay by bank. I'm sure for HMRC, it was a cost exercise. What are people paying for their tax returns? Potentially thousands of pounds. So the cost of sale on a card payment going through a tax return was significant. So, and the same applies to the automotive sector, where we've seen early adoption, furniture sector, where, any sector, I think, where card acquirers deemed them to be high risk from a chargeback or failure point of view. There's often been rolling reserves, significant securities in place that merchant accounts have had levied. Where with pay by bank, they don't exist, those securities. It's a direct customer to business bank transfer payment effectively, and that's freeing up cash flow for businesses that have had challenges with card acquirers in the past. We see it all the time in a multitude of sectors. From lending, again, it's quite a high ATV generally on repayments, so that transaction cost ultimately for a lender would have been a significant cost point for the business. Whereas, if we're bringing pay by bank in and charging a pence per transaction rate versus a large percentage and a repayment several £100s, it's quite easy to do the maths on that for the savings that a lender of any size, but certainly, as you climb in terms of collection volumes, the saving becomes potentially tens of thousands of pounds, which isn't a small amount of money to any business, right?
Yeah, exactly. I see. So it's a huge impact all round, to be fair.
Yeah, I think we've spoke a lot about multiple payment methods, digital adoption, pay by bank, and open banking. I think from our perspective at Acquired Grant, if you could just touch on what else. I mean, obviously we're allowing businesses to facilitate payments in as many ways as possible, but what are we doing with our acquiring strategies, and how are we using multiple acquirers to allow businesses to essentially optimize the way they take card payments over a traditional way, which would be one platform, one acquirer?
Yeah, no, that's a fair point, and I think that would apply to a partner of ours like DebtStream as well, because it's not always a one size fits all for a business. There are still legacy acquiring relationships, whether that's a lender that's got a particular banking provider. There are still acquirers that are linked to banks out in the market, and businesses feel comfortable not upsetting the supplier relationships that they've got. So having a gateway with multi connectivity into the acquirer ecosystem is very powerful, in the sense that if you've got someone that wants to move to maybe DebtStream on their integration into Acquired, they don't have to upset the cart. They can keep their acquirer where it was previously, their merchant accounts where it was previously, whilst availing the other solutions and benefits that will come from using DebtStream. We always pitch it, a dual acquiring strategy, and there's other benefits to that. So a lot of our platform partners with their end merchants will have 2, 3, 4 acquirers sometimes routing through our one gateway, and we can dynamically route that traffic by region, by bin, by MCC code, whatever it might be. And the benefits of that include failover contingency. Acquirers do have outages occasionally. We've seen that in the last 12 months with one of our acquiring partners, where there was an outage for several hours. We immediately switched that traffic for all of our dual acquired customers. They didn't see any impact to that. We obviously waited for the report from the acquirer so that you have that failover contingency. You see different auth acceptance rates with different acquirers in different regions, for a variety of reasons, again, in terms of licensing, in terms of sectors they might have worked with previously. So we'll have traffic split by region for certain customers to ensure they're getting the best authorization rates for good transactions, with the right acquiring partner. And there's the relationship management piece. I mean, just like we service customers on relationship, and I'm sure we both advocate that relationship management and how we deal with partners and end customers is a big benefit to using either of our platforms. I think a lot of acquirers have unfortunately, while they're partners of ours, they have rested on their laurels as far as account management and relationship management is concerned for customers of all different sizes. And I think if you've got a customer that has other acquiring relationships, the service side of that relationship becomes so much more important, because they're all fighting for share of wallet, just like we are with other gateways in the market, with other open banking platforms. The acquirers, it used to be sort of, you're with X bank, you use X acquirer. That world doesn't exist anymore. So the relationship management, and we advocate that to our acquiring partners. They obviously want more share of wallet from our end merchants, and we say, well, the customer's not been happy with you because of X, Y, Z. It's on you to prove to them that you can improve that relationship management side of things, and they'll bring volume back to you. But it's shifting the power dynamic back to the merchant, rather than the acquirer being the one that dictates everything. That the merchant is saying, well, actually, we are the customer, we bring the value to you more so than the other way around, and if you're not servicing us appropriately, you're not going to get our business.
So I guess on that side, then it's like, and I know we've said customer experience quite a few times in this session already, but from the end merchant, like you said, it's a better customer experience for them. They're having control. They're having less downtime. It's not impacting their collections rates, which for every like debt collection agency, debt purchaser, or collections and recoveries operation watching is a huge thing. Payments is at the core of those businesses or those areas or functions in businesses. But so it's adding a far better experience for those end merchants, but at the same time, it's driving a better customer experience for the end consumer. Again, right? Because it's consistency. They're able to make that payment at that right time. They're not having those issues of, oops, payment isn't available, or issue an error. on that side when they're doing the right thing at that point in time, trying to make a payment and help themselves get back on track.
And to that mind as well, you want acquirers that are at the forefront of innovation. So whether that's, previously things like having account updater services where, recurring card payments can be updated via the acquirer ecosystem and the gateway that's being used. So you're getting less failed payments again, which would be big for lenders with CPAs on cards, certainly. And Apple Pay and Google Pay, even with those sort of digital wallets, certain acquirers were behind others as far as launching them into the market. So the fact that we had multiple acquirers, we try and mirror our connectivity into all of them, and we will have specific requirements we look at when we're launching a new acquiring partner to make sure that one is not providing a lesser service than the other from a product stack point of view. Obviously, a lot of that being initiated at a gateway level from ourselves as well, but that is massively important. Are they an innovative acquirer that's bringing new product to market that's going to benefit our platform partners and their end customers as well?
Yeah, totally agree.
Yeah, I agree too. And I think, conscious of time, I just want to ask, kind of be a devil's advocate for one tiny second towards the end of it, which is just, do you think, from Martin and equally yours perspective, Grant, do you think you can offer too many payment methods and sometimes it can cause a little bit of confusion? I mean, what's your answer to that? Because I just want to play devil's advocate, because some listener out there might be asking that question.
Do you want to start, Grant, or shall I? Or should we go for it? It's a Friday.
It depends on the sector, right? I mean, I've worked in payments for a long time and across a host of different verticals. I think that there was the big mad buzz around alternative payment methods in the retail world previously. I think you can answer that question two ways, George. I don't think you can necessarily offer too many payment methods, but how you present them to the end customer is the key here. So, if you're offering alternative payment methods, don't just chuck 200 on the bottom of your checkout. Think about how that presents to customers in certain regions and ensure that those customers from where they're paying are presented with the payment methods that they're familiar with, they're used to, and that are most suited to that specific market. I think with our hosted checkout solution, you can switch payment methods on and off. So configuring it and working with a customer in that consultancy role that we play to say, well, actually, okay, you're launching pay by bank. Do you want to present that at the top of your checkout rather than the bottom of your checkout to start with? So it's the first payment method that customers see. You've still got digital wallets and you've still got card payment further down, but actually you're saying this is our preferred payment method as a business. It's what you're seeing first. We hope you'll choose that payment method, but hey guys, you can still pay the traditional ways that you're used to as well. So that checkout configuration and flexibility is really the key for me, and actually making sure that we're working with our merchants and partners to give them the checkout that best suits their client base. But you can have too many if you present it wrong. But I don't think it's a bad thing that more payment methods come into the world, because the nice thing about the payments industry is the level of innovation that comes into it, the constant change, the constant challenge. I think if it was just MasterCard, Visa, Amex, Discover Diners for forever, that it would become a stale, stagnant market, and nothing would ever move. So the fact that we're fortunate to work in an industry where there is constant innovation, and that drives the consumer experience at a checkout point of view. But for me, it's a no yes answer.
I think I'm going to build on a few things that you've said. To be fair, on that side, like localization is a massive thing. Like you said, for different payment methods, for different regions, different countries, because there is just behaviour that's been built up in different countries, right? Expectation of what they use and how they make payments. So that's massively important to have the right options there. But then some of the stuff you've highlighted, Grant, about the ability of Acquired as a platform and payment orchestration platform, in regards to switching on and off the different checkout elements, the different payment options, personalization is going to continue over the next few years to drive even further, right? The way our platform works is driven by data at the moment. We drive dynamic, personalized journeys on the DebtStream platform today for collections and recoveries. So we leverage all the different data sources we have available, including engagement data of how they're going through the service as well. So as we're working with partners like yourself that actually have the ability to offer different payment services for different kind of populations of customers, this is how we can drive the personalization further. We can understand actually the right payment options for this particular customer or this demographic of customer are these three payment options that actually get the best conversion. they're the right payment method for the customer, so it's convenient, it's a better experience for them, and actually it drives better outcomes for the business as well. But personalization is going to be a huge thing. So it's not a bad thing to offer different payment options. I think now with technology and where it's going, is it will just allow advantages of companies like ourselves, as we work together in different businesses, to offer personalization, to offer the right payment options at the right time.
I think you both covered that perfectly, and I don't think I could have done a better job myself, to be honest. So great answers. Look, thanks for joining. I think we've come to an end now. I think we covered all the topics we want to. But Martin, I definitely want to have you back in a couple of months and see how we're getting on and see if there's anything we can update each other on. But where can people find you? Are you? I think we're connected on LinkedIn. So is that the main point of call where people can get hold of you?
Yeah, LinkedIn. LinkedIn is a good place to go. Just search for DebtStream and maybe you'll see my mug on there or something like that on the page. But also, if you go to debtstream.co.uk, you can find a bit more information about us, our services, who we are, as well. But no, it'd be good to hear where they can find Acquired, because we've been doing lots of great work together as well with some joint clients. But it'd be good to hear for everyone where they can find Acquired as well.
I'll leave that bit to Grant. I'll let him plug his LinkedIn.
Yeah, lovely segue there, Martin. Appreciate that. So we're acquired.com. I mean, LinkedIn, I think it gets a bad rep by some people that call it has it become Facebook? For us, it's a massively important tool as a business, not just in terms of brand identity, engaging with new partners, engaging with new end merchants. We have other tools as well that we use, but yeah, LinkedIn, great place to find us. We have some great case studies. We're doing more and more content as a business, and I think just having these sort of open conversations with platform partners that we work with, there's always something new and different that comes up from these conversations. So glad to be on one of our early podcasts, George. Hope we did it justice for you, and the sky's the limit.
Yeah, fingers crossed. I'll let you all know the feedback. Thanks for joining. Take care, boys.
Thanks for having me.